Hey everyone, welcome to another episode of the Remote Real Estate Investor. I'm Michael Albaum, and today we have with us Fred McDaniel, our certified agent out in the Houston market. And Fred's going to be talking to us today about the market, what we need to know as investors, and what the price point and returns look like for some of the properties out there that he's seeing. So let's get into it. Fred, well, thanks so much for taking the time out of your busy schedule to hang out with us today and talk to us about the Houston market. Really appreciate you coming on.
Yeah, thanks for having me.
So for anyone that's not familiar with you as an agent, give us a quick elevator pitch on who you are, where you come from, and what agency you're with out in the Houston market.
So I was born in El Paso, Texas, so as far west as you can get in this state, and about 850 miles away from where I am now. Born and raised there, moved around a little bit. Went to high school in Jacksonville, Texas, which is in far east Texas, and then I went to college at Sam Houston State University in Huntsville, Texas, which is about 45 minutes north of downtown Houston. And since then, I kind of fell in love with the Houston area. I stayed in and around here, went back and forth between Tyler and Houston, and then I ended up back in Spring in the Woodlands area. Been here for about 13 years, but on and off for the last 20. So I work for Realty One Group, Iconic.
Great.
And I am a broker associate. So, I do have the opportunity to mentor newer agents when I bring them on, but, I'm not the broker for the agency. But, with my experience, it actually helps me sometimes to mentor newer agents because it brings up things that you forget when you've been in the business for a while. So it helps me to educate myself.
And it seems like Houston is on fire right now. Have you seen the Houston market shift over the last couple months?
And I've seen it shift over the last 12 to 18 months. I've never seen anything like this, and I've been in the business in some capacity for the last 20 years. I've talked to people that have been in the business for twice as long as I have, and they've never seen anything like this in the Houston market. Really, once the pandemic started, is really when our market just lit on fire. It was crazy how things work out. And, one of those things that, in our economy that became a little bit more needed was real estate. And, we had an issue with historic rates being historically low rates and historically low inventory all at the same time. So that's the perfect storm for increase in prices, it's been wild. It's been fun. And I've seen the inventory go down to such a low level that I think at one point this summer we were under 1 month inventory. I think we're back to 1.8 right now. Last year, this time was around 2.5 months. So theoretically,
Wow.
if no houses were going on the market today in 1.8 months, there would be no houses left on the market. But, it is, there's still a lot of opportunity though, because
That's wild. And what would you call a healthy market?
I would say a healthy market is between 2 to 3 months inventory. Probably our norm, about 2.5 months on the average.
Yeah, Michael, it's usually about 3 months. And, interesting enough, Fred's background's really interesting. I would love to see or hear, what the background is there, because he does come from a single family rental background when the market was much different, right? Back in the days when you could probably find properties a little more freely, and he was picking up properties for institutions. So maybe Fred, give us a little background there, because I think they'll help connect the dots.
I'll start back a little bit further. I actually I started in the mortgage business as a mortgage banker. Still have a mortgage license active, but when the economy kind of turned a little bit in 2008 to 10, and backed by the mortgage industry, I started doing a lot of work on foreclosures. Selling foreclosures. You have to pivot yourself, and you've got to evolve sometimes in your own career. Selling houses just wasn't necessarily working out great for me at the time to just regular people. So I got into working with the foreclosures, and by doing that, I met a lot of investors, and all of these investors were looking to pick up properties to rent. We used to work with a lot of flippers, and the market just turned, and when the prices go up, the flips just don't make sense. So it made me go educate myself and start to learn a lot. I asked a lot of questions from these people, and I picked up some clients that are basically lifetime clients that whenever they see something they want it, I send them properties regularly to look at. And just kind of becomes a little bit more of second nature to you when you're looking for a rental property. So sometimes it's hard to, describe what exactly I'm looking for because I know it when I see it, kind of a thing.
Mm-hmm.
You know, doing that and learning from them, from their own businesses and how they rent their properties and what they do. And I also, got in with a couple of other kind of property managers to kind of learn from them as well.
Oh, that's really cool.
I worked with a company out of Irvine called Home Union, kind of did similar to what Roofstock was doing. I worked as their agent for Houston, and they provided the leads online and their clients, and we ran the numbers for them, and we found them houses here in Houston for rentals, very similar to what Roofstock is doing right now. So my background in that is finding the properties, running the numbers, making sure they work, putting them into quote unquote their portal, showing them to the clients, and then talking to the clients and walking them through the process. And some of those, we ended up with some institutional buyers in that from that point too, but mostly the individuals.
Cool. So it sounds like, Fred, you are very well positioned to identify investment property opportunities out in the Houston market. So I'd love if you can share with everybody, what is it that you look for before you post a property to Roofstock that makes a great investment property?
So what I'm looking for in Houston, I'm typically looking for a house that's newer. When I say newer, built 2000 or later. I'm looking in all the price ranges, honestly, because the market is so huge. I think we were talking earlier about the size of the Houston metro area. It's the size of, like I said, the state of Connecticut, 7.1 million people. So we have everything, and some of those higher end markets actually make sense. $400,000, $500,000, $600,000 houses that can rent for $3,000 plus a month may actually work. But I'm going to be looking for a newer home generally, or a home that's been renovated if it's a little bit older. I'm looking for, when I'm looking at these houses, I'm looking to make sure, they don't have purple and orange and pink rooms and things like that. Or if they do, if it's just one room, if that can be, remedied easily, maybe that makes sense. But, I'm looking to make sure that, a lot of things here, because they're newer, a lot of the older homes are renovated. I'm looking for a more modern look on the inside. A little bit less carpet maybe. And then I'm looking at, after I look at those individual houses, I'm looking to make sure that the rent prices are pretty steady in that neighborhood. One thing that's key about Houston or the Houston area is there's no zoning. So we do have neighborhoods where there's 200,000 range homes right next to a neighborhood that might have 400,000 or 500,000 range homes. So when we do our rental comps, when we're looking to see what the rents are, we're getting very hyper local. We're getting neighborhood specific, sometimes street specific. We don't want to pull a comp from a 3-bedroom, 2-bath, 2,000 square foot house right next to the street over where there could be one that's 5-bedroom, 4 baths that's a 3,500 square foot home. So you have to be very careful with your comps. But I am looking for, like I said, I'm looking for a little bit newer, a little bit more modern, maybe less work to be done because, in Texas, as you know, our taxes are a little bit higher. So, for the most part, we're not going to get huge cash flow properties here. They might cash flow a little bit, they might break even, but you're looking for appreciation for the most part.
Okay.
So I want to make sure that when we do have those, that they do have the opportunity to appreciate.
That's great to know. And I think it's so important for everyone to keep in mind that if you are a cash flow heavy investor, that Houston might not be the best place for you because of that fact, because where the price point and where the taxes are. So we're going to bring up a map here, Fred, and I'm wondering if you can give everyone watching this a rundown of where some neighborhoods that are interesting investment opportunities that you're seeing.
Okay, so just looking at the map for people that have never been here, or maybe somebody that isn't really familiar with Houston. The really cool thing about Houston, one of the things that I like about it, is that the roads are laid out in a radial pattern. So you see that you see the city of Houston, and there's loop number 1, loop number 2, and then on the outside, loop number 3, which when complete will actually be the largest loop in the United States. It's called the Grand Parkway. So generally, I'll tell you where I'm located.
Yeah, it looks like a tire.
Yeah,
like
it does.
Spokes.
The cool thing about it is if you get off on the wrong exit, you can just turn around and you'll get right back on somewhere pretty easily to get back to where you need to go. But if you're looking at Houston itself, so central Houston, the city of Houston, if you go due north on Interstate 45, up to where it says Spring in the Woodlands, that's where I'm located. My office and my home are in those areas. So obviously, by living in that area and knowing that area the most, I'm going to start there. And I kind of radiate out myself when I start looking at properties, and I'll tell you, the neighborhood I live in, there are probably 100 realtors that live in my neighborhood. So if you want to know where the best places to live are, go follow all the realtors. But we go because we see so many houses, we know the best places to live. But in general, if you're looking around like the city of Houston, and really what we're doing is we're looking at mostly the suburbs, because the suburban areas are where we're going to get most of our properties. All the way from the north side over to the west side, Interstate 45 up, and then over west on Interstate 10, you're going to have your best opportunities for your rental properties in these areas. And this is where the growth is. The cool thing about Houston is there's just a lot of room to move, a lot of room to grow. There's still a lot of land, and the developers and the builders are building like crazy. So, I'm going to follow that, like that outer loop, that third outer loop that I call the Grand Parkway. I'm going to follow that around for the most part to start looking for my properties. So I'm going to Spring, I'm going to Tomball, I'm going to Cypress, and I'm going to Katy. And I'll go out to the east a little bit as well. But, those are going to be my main areas where I'm looking for properties. And we're going to find those, those that are in the sweet spot. And we're talking about the sweet spot. What used to be the sweet spot or the bread box would be, under 200,000. Nowadays, those are becoming less and less available. Even in Houston, the prices that have increased to the point where, the sweet spot for a rental property, it might be a 3 or 4 bedroom, 2-bath home, anywhere from 1,800 to 2,400 square feet. And they're going to be in that 200 to 250 range. And generally those are going to rent probably around like anywhere from 1,800 to 2,000 a month.
Okay. All right.
But yeah, if we're looking at Houston itself though, mostly I'm going to stay on the outer rim of Houston area for properties.
Okay. Great to know. And do you know, Fred, did you say 7.1 million people in Houston? That's the population?
Yeah, that's the Houston metro area. So the map you're looking at is basically the Houston metro area. You could even go a little bit further north. So fourth largest city in the nation. I think they've estimated next year for the population to grow somewhere around 100,000. I ran some numbers on that, and what I was looking at, and I was looking at some census data as well. The number of people that move to the Houston area per year, it averages out around somewhere around 122 people a day. So that's a huge number. People are coming from all over the world. They're coming from every state, and they're being brought in not just like by oil and gas is what we used to be, used to be what we're known for here, and they still are. That's the basic, economic driver here. But you'd be surprised the medical industry is actually the number one employer in the Houston area. We have the largest medical center in the world here. A lot of people come from other countries to get treated for cancer at our medical center. So it's really strange that, that's what used to drive our economy, and now that's not even the biggest employer. But like I said, about 122 people per day. They say when you take into account move-ins and move-outs and births, it really averages up more to like 250 increase per day.
How about that?
So our population's growing pretty rapidly here.
And yeah, you touched on kind of the big economic drivers. Any other notable companies that are moving to Houston or based in Houston that would be of interest to someone that doesn't know about the market?
Yeah, but all the oil and gas companies, the big ones, we've got Shell, we've got Exxon, then you've got your like oil and gas engineering type companies like Halliburton, KBR. Some people may not recognize that, but it used to be called Kellogg Brown and Root. We've got some, companies that noted that aren't in those industries like waste management. HP, Hewlett Packard, is moving their operation here. They're building right now, almost complete. The beginning of 2022, they should have their actual headquarters here, ready to move into. So I mean, and then Houston's got a lot of other type of companies like Igloo Coolers. They build all their Igloo Coolers. The big warehouse and their headquarters are out in the Katy area. We've got about now. I drive around a lot, so I'm driving in all different parts of the city. I see 3 brand new Amazon fulfillment centers being built right now. There's already one really big one here in more central Houston, but 3 that I've seen with my own eyes. There could be 4 more that I don't know about. And, they're just everything that you can think of. That's one of the things I like about Houston is that, I'm kind of a city guy. So I like to be close to everything. And I pretty much, if you name it, I can get it here. And that's one of the things I like about the area.
Hey, Fred, I got a quick question about like the Houston port, because that's such a hot topic today with like supply and demand and just the supply chains in general. Is the Houston port, is that really something that's used and notable to the city and driving job growth? Because I know that's just what's really causing the big mess right now with getting these products from around the world, shipped to the United States.
Yeah, it definitely is, and I can't quote you statistics on it or anything, but I know it's one of the busiest ports, in North America. But it definitely drives a lot of jobs. I mean, it's centrally located as well. A lot of rail activity comes from there, and a lot of trucking activity comes from there. And I mean, there are, like I said, I wish I could quote you numbers on the amount of activity that goes on there and the jobs that it brings. But I mean, it is definitely one of our major employers here in the Houston area. And then we've got, along with that port, so right along that Gulf Coast there, we also have a lot of the oil and gas refineries. So, I mean, there's definitely, when Houston is affected by, say, like a storm and they have to shut those things down, your gas prices go up in other parts of the country before they go up here. Because, they've got to get that to California, and they've got to get that to New York and Florida and other places. So that gas, when the production stops on those oil and gas refineries, it's going to drive prices up. So, there's a lot of incentive for the workers to be here in place to be able to move that product out of this city or out of this area.
Yeah. I think I just paid $5 a gallon for diesel out here in California and made me want to cry at the pump.
Oh, no.
That's brutal. So, Fred,
that's hard. That's hard.
Yeah. You touch on something that I want to talk about, and that's, if there's a storm affecting the port, what are some natural hazards or things that people not familiar with Houston should be aware of that are maybe commonplace to Texans out there?
I get to talk about this a lot, especially working with people that aren't from here that are buying houses that are, they live in other parts of the country. So basically, number one, we're in Hurricane Alley. So hurricanes are always, going to be a factor, and they're going to be a factor for your insurance costs, and they're going to be a factor for, the dwelling itself. Now, I kind of tell people, especially if you're from California, we don't have earthquakes here. So, when I start talking about California, you start talking about earthquakes, it scares me to death. Same thing happens when I talk to somebody, especially from the West Coast, and they ask about hurricanes. It is scary. I've been through some of these hurricanes, and they're scary, but they're just kind of a fact of life. I mean, we wouldn't be here if every single one that came through here devastated the area. So, what comes with those hurricanes is, you got your windstorm damage. We don't get a whole lot of like tornado activity, and we really don't get a lot of like hail activity. We get some from time to time, but the major, I guess, natural disaster that we have that comes through, hurricanes, what that brings, the winds and floods. Houston is just, it's a low-lying area. So I always tell people, if you're concerned about it, get flood insurance. Not every place floods. Sometimes they do, sometimes they don't. At any given point, anything could happen anywhere. But, there wouldn't be this many people living here if, we were going to get washed off the face of the earth every time it rained. So, it's not a big concern to me, but I understand where people are coming from when we talk about, those type of natural disasters and where they, what really makes where they really factor in as far as like insurance goes.
That makes total sense, Fred. So it's really not as big a deal as it sounds like maybe other people make it out to be, or us Californians make it out to be, since we don't have those type of events here. Anything else that people should be aware of that's just kind of commonplace specific to Houston? Maybe like with regard to inspection reports or...
Yeah, when you're talking about an inspection report, one of the most common things that I do I make sure I talk to every client about this, even people that are from here, because not everybody always understands. We're sitting on some of the most expansive soil in the United States right here. It's clay based, and when it's dry, man, it contracts, and when it's wet, it expands. Well, the cool thing about that is, somebody way smarter than me years ago came up with a way of engineering these slabs that the houses sit on and the buildings all sit on, that they have post-tension rods and cables. So what they've done is they've engineered these to accept the movement, the natural movement that's going to come from these really heavy houses sitting on these heavy slabs on this expansive soil. And the cool thing about that is that, they just pop an end off and they can release tension where it needs to be released if needed, or they can pull it back together. So you're going to have cracks in slabs on almost every home and every building here in this area. And Mark can probably speak on that too, because it's similar up in the Dallas area and all over Texas. We're just sitting on that type of foundation here. But we were able to explain that to our clients in a way to help them, I guess, kind of ease their mind on it, because maybe my own house is going to have that problem too. So, like I said, there's a solution for that. Some of the much older homes may not have those post-tension cables, but they can also come in and retrofit those too. There's companies that specialize in that. So even the older homes that don't have those, they can drill those in. Now, it costs a little bit of money on those older homes, but that's another reason why I like to try to stay a little bit newer homes, because I know that, the building codes say that they have to make them that way. And then the other issue as far as like inspections go, and this is probably the most common thing that we deal with, are the HVAC units, the AC. This is a hot area, and I mean hot temperature wise. These ACs run 10 months out of the year. Right now at my house, I think it's 80 degrees, maybe a little bit hotter than that right now. My air conditioner is on. So, you're talking about these things getting a workout. So the lifespan on those aren't maybe as high as they would be in some other parts of the country, but they also engineer and they make those to last longer too, because they know that they have to go. The type of air conditioning unit that I have here is not the same type that somebody in Kansas City has. So we know the furnace and the AC unit are going to run here, and in almost every inspection report, the inspector's they're going to hit that controller, and they're going to test. They're going to test all the outlets where the air is coming out, and they're going to tell you, what the temperature differential is. Almost all the time, I ask the sellers, to at least provide a report that they've had it serviced or have it serviced during the contract period, because because they run for so long, it's such a high capacity. They should be serviced at least once a year, if not twice a year. But like I said, it's one of those also fact of life here. I mean,
awesome.
So Fred, I know one more thing about the area is it's very moist out there. So in terms of moisture, how do you see that impacting the properties, and what do you find on the inspection reports that either scare you in terms of moisture, and what doesn't scare you?
We do have a high humidity here, and sometimes you'll notice the algae on the siding on the outside of homes, especially where, water runs off of the roof. And, it rains here a lot too. So there's going to be places where, and it looks like mold sometimes. And what'll happen is if you get an inspector or even a buyer or somebody that doesn't know, they're going to look at that and go, that's mold. Well, it's not really mold, it's algae, and it really just needs to be cleaned off, and they can treat it with, a chemical or power washing or something like that. But, it's just a natural part of the outdoors here. I mean, it's going to be on everything. But, that specifically related to the moisture and to the humidity. but it's not mold eating up the house in most cases.
Yeah, that nobody likes to talk about that 4-letter word, right? We try to avoid it, so we call it moisture for sure. Hey, and in regards to just flooding, I know we talked about that for a little bit, but we didn't talk really about the insurance aspect of it. Maybe give the buyers and listeners just an idea about what it is that you kind of run. How do you run your numbers? What are the things to look for? What are the flood zones that you stay away from? And when you underwrite properties, like how do you factor in that risk?
When I'm underwriting properties, especially for investors, I'm looking for properties that are not in flood zones. Now, it doesn't necessarily mean that a house may not have flooded in some 500-year storm, which we had in 2017 with Hurricane Harvey. But I'm going to try to stay away from those. And for most of my buyers, now there are places where their house is in flood zones, but for the most part, these developers and these builders try to build away from there. Now, if you're getting a loan, if I put on my mortgage hat for a second there, if you're getting a loan and you are in anything but the X flood zone, which means you're in some type of a flood area, the federal government requires that you have flood insurance on that loan. So, that's going to raise your costs. And that's one of the reasons, our margins are pretty thin here because our taxes are a little bit higher. So we're going to stay away from any extra cost, and flood insurance is going to add a pretty big chunk of, cost to that and pretty much take away any kind of returns that you would get off of a rental house. So, but like you said, Mark, I'm looking for houses that are not in the flood zones, and I'm looking at their seller disclosures to see that they haven't flooded before. I'm not talking about, somebody's pipes busted in the winter or something like that and they fix that. That's not a big deal. I'm looking for rising waters, because then we get back to the moisture and the bad 4-letter word mold. When you have those rising waters that come from a flood, they bring in those particulates and stuff that cause those issues in a house. And those houses can be renovated, they can be rehabbed, but at the end of the day, how comfortable are you as an investor in buying a house that flooded before? And I know if it were me, I'm probably not comfortable with that.
I'm right there with you.
The good news is Houston is huge. There's houses that have flooded, but there's way more houses that haven't flooded.
That's great. Fred, can you give everybody listening a rundown or an idea of how they should be calculating their property taxes and how that works in Houston?
Yeah, the property taxes work basically the same all over the state of Texas. We are a high property tax state. We don't have a state income tax, so we kind of give up a little bit, on the real estate taxes. And, the theory is we're basically paying for some things from real estate taxes that other states might pay for in other ways. Number one thing is the schools. We have really good schools here in the state of Texas. The public school system, most people send their kids to public school, and they're very good schools. So you're paying for basically those school systems through your taxes. And that's the largest amount of what comes out of there. Also your city services and things like that too. But the taxes are calculated by each county. So the county appraisal district assessor, they assess a value on a house every year. They do it every April. I think we get an invoice in the mail for what the value is going to be this year. Sometimes they go up, sometimes they go down, sometimes they stay the same. Lately, I've been seeing it more going up, but that's a byproduct of the economy right now and the real estate market. So there is a cap for homestead properties. They do cap it off, and then there's a cap that the city and county governments can't go up a certain amount each time. I'm not going to quote you those cap amounts, but generally, if you're buying a house that's $350,000, typically they're not assessing that value at the county level at $350,000. They're probably going to be more like the $275,000 or less range. Now, sometimes they do get up. I'll say it in general, if the lower the price of the house, the closer you're going to be to the value, the tax value at that. The higher the price, a little bit further away. So it gives you some, I guess a little bit of a break, and you're not paying, 3% on a $400,000 house that may be assessed at $350,000. You know what I mean?
Okay.
But that's how they're calculated. And they do assess them every year, but they don't always change.
Got it. And do you know, Fred, does a sale trigger a new assessment, or is it annual, independent of whether a sale happens or not?
Right. In Texas, the counties aren't allowed to use that data, to use the sales data. Now, whether they do or not, is kind of up in the air, but their assessment is done independently. They have an independent appraiser, or appraiser in quotes, somebody that works for their appraisal district that assesses those values, and they do an independent each year. I'm told they use Google Maps, to calculate square footage and things like that.
All right, cool. Well, that's great to know.
So Fred, real quick, the Texas taxes are high in general. You may have some flood insurance. Your insurance may be a little bit higher. Maybe give us an idea about when you talk to investors today. You mentioned there's appreciation that's the big play. What's the expectation that you see for appreciation maybe now going into like 2022? So, buyers don't think, hey, I missed the boat. Texas had huge appreciation. What is it looking like in the near future that you would expect?
In general, we say in the Houston area that the market dictates about a 2 to 3% per year on average. Now, there's been a big increase over the last 10 years. I think it was like a 92% or something like that. But, we're looking at about 2 to 3% on average year over year. And you're going to always have your pockets. You're going to have sometimes some suburb may blow up, and it just the hot area for right now, kind of where I live, north of where I live is like that right now. In the recent past, it's been the west side of town where like the Katy and Cypress areas. But you'll have your big jumps, but if you average it all out over 10, 15 years, it's going to be generally about a 2 to 3%. The good news is that, like I said, with all the number of people that are moving to Houston, they're not just coming from, other places in this country. They're coming internationally. And a lot of those people aren't going to buy houses, so they need to rent a house. They're on different types of visas, so they maybe can only be here for a couple of years. And a lot of these companies, especially these oil and gas companies, they bring people in from South America, from Eastern Europe. These people are coming in to rent houses, and they keep our rental prices at or above what they are now. So we always have a good turnover where those homes don't sit empty for very long.
Great. Mark, anything else for Fred before we let him out of here?
No, I think he covered everything that I wanted to hear about Houston. I'm from Dallas, so we didn't talk about sports, so we kept it above the belt, which was good. Yeah, absolutely. So Fred and I will take that offline. But I think my last point is you kind of called Texas this little area called the Texas Triangle, which starts in Dallas, goes down I-45 to Houston, cuts over to San Antonio. And you just have all this growth happening within those areas between Austin and Waco. There's College Station. There's just so much activity that's happening, kind of that infill of that triangle. So without a Houston, without a Dallas, without a San Antonio, some of those other big markets, you probably wouldn't have that activity happening. So I think Houston's got a lot going on. It is way bigger than Dallas. So I would have to say we are the big D, but Houston is by far much bigger and has a lot of activity. So I'm excited just because, Fred's getting a lot of offer activity right now, especially with being a certified agent as a part of our network. So we love the fact that he can contribute, be the local expert, and he's helping Roofstock grow our business and vice versa for all these buyers that are wanting to work with him and get a little bit more in depth into the Houston market. So thanks for everything you're doing for us, Fred.
Yeah, no problem. I'm excited. I like talking to all these new people every day.
Perfect.
I like finding them in houses.
In that vein, Fred, if someone listening wants to learn more about the Houston market, what's the best way for someone to get a hold of you?
They can get a hold of me through Roofstock, or they can email me at fred@fredmcdaniel.com. They can also call me at 713-321-9161.
Awesome. Prepare for your phone to blow up, my friend. Fred, this was great. Thanks so much for coming on. Really appreciate you taking the time, and I'm sure we'll be chatting soon.
Yeah, thanks for having me, guys.
Alrighty, everyone. That was our episode. A big thank you to Fred for coming on. The Houston market sounds to be on fire right now, which is ironic coming from a California guy, because that means different things to us out here on the West Coast. If you enjoyed the episode, feel free to leave us a rating or review, whatever it is listening to your podcast. And as always, we look forward to seeing you on the next one, and happy investing.